Hey guys, super happy to be here again. And tonight we're having Jason Shapiro. Now, if you do not know who's Jason is, you should type in Google Jason Shapiro and you will be able to find plenty of his videos walking through over the COT report. Now, as Jason is trading over than 30 years of experience, and we will have a great time talking tonight. I think that this conversation will lead to a better understanding fundamentally of how the derivatives market work, how the forex market work, and how the parties moves their money. So yeah, without further ado, and without giving you any scope besides what we have already told you, Jason, I'm happy to have you here on our show, the TradePod. How are you today?
Good. Thanks for having me.
Thank you for being here. So before we'll start, please share with the audience a little bit more about yourself. Me and you, we know each other, but tell a little bit about yourself, a little bit about your history, your background, wherever you came from, and so on and so forth.
I'm 57. I started trading at about 21. I was living in Asia. I started trading in the Hong Kong market, Hang Seng Index futures and stocks in Hong Kong, and got involved there and really sort of caught the bug and decided that that was the way that I wanted to go career-wise. So I started trading and I went through about 10 years of learning, and having my P&L up and down, kind of the typical roller coaster that people go through. And then I really sort of pegged down over that time period a process that I believed was going to work for me. And ever since then, for the last, I don't know, 24 years or so, I have been trading this one process. And that's what I do. I manage money. I manage institutional money under my CTA, and that's what I do now.
Brilliant. So going back on your experience with the Hong Kong markets, I would love to know. Based on your scope, what are the differentiations between the Asian markets to the European markets and to the markets that we already familiar with in the United States? Like for you as a trader, how do you approach each and every single market, and how do you see the differentiations between each and every single market, and how do you approach them?
I don't really think there is a big difference, to tell you the truth. It's just asset prices that go up and down based on the emotional responses of the people that are involved. Um, and so I treat all markets exactly the same. I trade stock indices, bonds. I've traded futures and everything, stocks and fixed income and currencies and energies and all different commodities, and I treat them all exactly the same. Like I say, I have a one process that I trade, and when that process hits in one of those markets, that's when I put on a trade.
Brilliant. So, if you approach all the kinds of financial products out there the same way, basically, and you trade them the same way, can we please dive deep into the way that you trade in in a much comprehensive way that will be able to understand how we can approach those kinds of assets as well. So, in terms of like breaking your trading process down, what do you think is the best milestone to start with once you are looking for opportunities to trade the markets?
I think you have to know that you need to find an edge that is going to work over time. Um, and in finding that edge, you have to, I believe, understand that the market is a discounting process, um, which means that it theoretically discounts all known information. So trying to find an edge by having better information is pretty much an impossible task. And if you think that's what you're going to do, More power to you. I thought that's what I was going to do
Hmm.
when I started, and it proved to not be true. It doesn't mean that you can't have certain trades that work doing that, but over time, I think you're going to have a hard time having a positive P&L over time if that's what you're going to do. So you have to think in terms of the market being a discounting process and how you're going to be able to outdo that discounting process.
So why do
Um,
you focus? So why do you focus on the COT report, basically?
so what I believe is that the discounting mechanism in the market, while most people will tell you is price of an asset, I believe a more effective discounting mechanism is actually participation that's going on in an asset. So, like, I am not looking to, for example, short something because the price has gone up a lot. Um, that's called fighting the tape, and that's going to get you in trouble over time. I like to look to say short something when the participation is too high. So when way too many people are long a certain asset, I'm looking to go short. And when way too many people are short a certain asset, I'm looking to go long. It doesn't necessarily mean that I'm going to get it right, but what it does is it puts me in a position of having very good risk reward so that if I'm wrong to a small amount. And if I'm right to a big amount. And to me, that's really what trading is. It's not about trying to predict what a market's going to do. It's about getting yourself in a situation where if you're right, you're going to lose one. I mean, sorry, if you're wrong, you're going to lose one. And if you're right, you're going to make five or six. And if you can do
Hmm.
that over time, that is what's going to get you positive returns. So, how do I find when people are too long or too short? Well, one of the ways is I look at the commitments of traders data, which is produced by the US Futures Exchange and shows you exactly what the positioning is by the various participants in the market. So, therefore, I can measure when they are either too long or too short.
Hmm. I understand. So talking about the importance of having an edge within data and within the instruments that you're looking at, and I don't know, the articles that you're reading. What do you think the COT is the most powerful, or one of the most powerful ways to find relevant data that will drive you to know on what trend you need to enter? Because you have spoken about convergence between, like, I don't know, shorters and longers within the market, and the commitment traders really enables you to see it, like non-commercial and commercial. So I would like to learn from you. How do you identify what materials to read, and how do you identify where to enter based on the COT report as it is, looking at the commercial and the non-commercials?
So, as a person who is trying to pick major turning points in the market, I am looking for extremely one-sided positioning in the COT report by, let's say, the
One size
speculator.
positioning? What do you mean?
So, I look at let's say, the large speculator positioning. This is the shortest they have been in 5 years in X asset. That to me is one-sided positioning. So, if this is the shortest that the speculators have been in 5 years, then I'm looking to go long because they are overdone on the short side. They are overdone in the participation of it. So the chances are, should things turn the other way, they can turn big because should they turn the other way, all those people will start getting squeezed out of their shorts and there can be a big move the other way. So
Hmm.
that's what I'm looking to do. Um, when I actually do it is I'm looking for some form of market confirmation before I do it. Positioning can stay one-sided for quite a while. Doesn't mean the market is going to go the other way. So I'm looking for the market to confirm that it is going the other way first. And people have different ways of what they call confirmation. You can call it it's gone up through a moving average or it's done something like that. How I do it is I look for market reaction to what should otherwise be negative news. If I
You're
see,
looking for the first move for the initiation, like technically.
well, I'm not really doing technical. Some people do, but I don't. I like
No, but
to,
looking at the price action, like realizing where the initiation move is starting, and then, all right, I realize that there is something that I should notice, something interesting that takes part here.
that's right. I'm
Hmm.
looking for a price action confirmation and then I will enter the trade.
Hmm. So speaking about you know what, let's make it deeper. Talking about fundamentals of the COT report. Let's break it down a little bit. Now, you have more than 35 years of experience trading, and you have might see a lot of different informations and resources. And I would like to learn how do you leverage the COT over time? Because you know it's really not easy to read between week to week. And I know because I have analyzed the COT 5 years back, and I saw where the people you know turns their position upside down, and it happens not pretty frequently. Like the commercials tend to move the market to their desirable place, and the non-commercials tend to play the aggressive as the aggressive players. And I would like to learn how do you consume that process, and how do you put things into real action.
I mean, I just told you how I did it. I index the data. I try to find when they are massively short, and that's when I'm looking to get long, or I'm trying to find when they're massively long, and I'm looking to get short. I'm very patient about it. I don't. I'm very patient. I wait until, and that's why I trade so many markets. I don't get tons of trades, um, one or two trades per market a year, but I trade 37 markets. So over time, it's enough trades. But I'm just very patient. I wait until they're super crowded on one side. I wait until the market confirms that they're about to get squeezed the other way, and I go for it. That's really all. It's really as simple as that, at least on
Sounds
paper.
awesome. Sounds awesome. So basically, speaking about the entire approach that you have about trading, you said that you're managing money, and I would like to ask you over time, how do you manage your capital between those diversification of market? Because I find that speaking with hundreds of people that mess within that industry, that it's not an easy task to do. And I would like to learn from you first. How do you build a sustainable trade record to prove that you are efficient? And how do you manage your markets to maintain a sustainable trade record?
I mean, the only way to build a track record is to get some money under management, right? And start putting the numbers up, right?
Yeah,
And have them audited. And that's how you build a track record, right? You can do it with your own money. You can
yeah,
do it
but
with other
it's
people's
not
money.
easy. It's not easy.
It's not easy at all. I started, and it took me 15 years at least. I would say,
Oh
argue
my
maybe
goodness.
somewhere around 15 to 17 years before anybody took me seriously at all. And before I
Why
could really,
so why so why so much time? Why took you so much time?
I think it's a combination of I didn't go to, one of these Ivy League schools. So I couldn't just get my foot in the door. I had to prove myself. And the way that I approached the market, being so different than how most of these people approach the market, they didn't want to understand or believe that what I was doing added any value. So I had to build a long track record, and it took me a long time to get any kind of real money under management. So
Hmm.
once I was able to do that and establish a good track record with some real money under management, then some people started to take me seriously and started allocating me money.
I understand. Wow, that's a thing that I see people face each and every single time. So for me as an entrepreneur and as a CEO of a trading company, I find it to be not that easy. And when I speak to people, specifically people like you, I discover how hard that situation is. And I would love to tell you something, Jason, that I would like to learn. Um, like, what are the difficulties that you have been experienced over time building this trade record and building it properly in order to manage a handful of millions?
I mean, the difficulty is putting food on your table while you're trying to build such track record, right? That's the difficulty, trying to live off of your trading P&L, and at the same time build a track record of your trading P&L is extremely difficult. I was pretty poor for quite a long time, while a lot of my friends were working on Wall Street and making good money and making me feel pretty inadequate
They couldn't
overall.
replicate the same trade record. Like if I work for Wall Street right now, hypothetically saying, do can I replicate the same? Or you know what? Let's leave off the word replicating, but let's take the word using. Can I use the trades that I took over my time with the Wall Street flow of traders, and to take it onto my own thing and to build a trade
I don't
record
know what
based
you
on my
mean with
results
track.
with.
I don't know what you mean with your track record with Wall Street. I don't know what that means.
So basically, taking the trades that I have took over my time at Wall Street, and based on that, to build a trade record. Why do I need to start from scratch?
Well, you have to have some sort of money under management in order to have an auditable track record. You
Hmm,
can't just say, "Hey, I worked at Goldman Sachs and here are my trades while I was at Goldman Sachs." That's not going to work. You know, you need to have an auditable track record, um, which means a separately managed account that you and you alone are responsible for.
hmm, I understand.
Now,
So
you can work for
basically,
one of these
yeah.
big Wall Street firms and just build a reputation, and then you can get people to give you money to manage anyway. Plenty of people have done that, didn't necessarily have to have an auditable track record. They just came out of whatever, Goldman Sachs. Hey, I was a big shot at Goldman Sachs, and now I'm going off on my own, so give me money. And that's a way to do it too. I wasn't able to do that because I could never convince the big Wall Street firms to hire me. So I didn't have a choice.
I understand. All right. So sounds to me pretty interesting to take that conversation um deeper. Let's talk about the markets. Let's talk about the markets. So, how do you trade the markets? How do you approach the markets? Now, I know that that's your secret sauce, and you, of course, you would never tell me what do you do specifically. But I would like to
I,
ask
I
you,
I actually told you exactly what I do specifically.
no,
I
but
look I
how do you
look at
look
the
at the markets? How
positions
do you find those
based on
divergences?
COT. I
Yeah,
look at COT. I look for when they are overcrowded to one side, and I'm looking to go the other way when the market confirms that it's time to go the other way. And for me, what market confirmation means is when
it's
there's what I like to
initiation.
call a news failure event. So if the market's been going down on a certain bad news, let's call it an inflation number or something, it has been causing the market to go down and one of those pieces of news comes out to confirm that negative news, and the market doesn't go down on that anymore, when everybody is already massively short, that's when I will buy.
How do you know that how do you build an edge for those type of strategies? Like this strategy is like hyper swing, and how do you build such how do you construct a strategy to win the title strategy that have an edge over the markets over a long period of time just by looking at the COT data basically? Because I found it really difficult. It's not
It's
an easy task
difficult,
at all.
man. This game is difficult. There's a reason why people who are very successful in this game make a lot of money. It's because
Mhm.
it's very difficult to do. To be good at something that is easy doesn't earn you a lot of money. Where do people earn a lot of money? Be one of the best athletes in the world. Well, that's very difficult to do. There's only a few people that can do that, so they make a lot of money, right?
Mhm.
Be one of the great traders of the world. Very, very difficult to do. So the people that are able to do that can make a lot of money. If it were easy, and there wouldn't be very much money to be made in it. It's pretty easy to be an Uber driver. Uber drivers don't make a lot of money, you know. They make enough to live on, I assume, but you're not going to become very rich being an Uber driver because anybody with a car can be an Uber driver, right? Um,
Mhm.
you know, you need to be very good at something that's very hard to do in order to make a lot of money. So yeah, you're right. It's not easy, but it's never going to be easy. It's very difficult to do, and it takes time, and it takes a lot of losses, and it takes a lot of learning, and it takes an open mind to be open to the fact of why you are losing and the balls to change the way that you think in order to win. People have a tendency to want to be right. I really don't care whether I'm right or wrong. I can sit here and tell you where I think the market's going to go, here, there, the other way. It doesn't really matter if I'm right or wrong. You know what I mean? All I really care about is if I earn positive returns. And that's me, the way that I have found that I can earn positive returns over time is sticking to my process. So that's what I have to do.
Hmm, I understand. Sounds good. Now, developing a trader approach or a trading approach, how would you tackle such a problem? Like if I'll tell you, hey Jason, I would like to, I have an idea. That idea says that you should enter a trade once you see a correlation between two sorts of assets. And that's basically the initiation idea that I have. Now, based on that, and based on your experience, I would like to ask you, how do you construct a strategy based on that trading approach or trading idea? I don't know how would you define it, but um,
You could start by doing some back testing. There's plenty of back testing software that you can get involved with, like TradeStation or something, and you can start to back test your ideas and see how they do based on that. Can be dangerous if you fit the data too much, but if you can be honest about your back tests and keep them simple,
how do you avoid overfitting? I'm sorry for the interruption, but how do you avoid overfitting?
you have to have very few inputs, and don't change them over time, right? And do in sample testing and out of sample testing. And, there's all kinds of ways to do a proper back test that you have to stick to because it can be very easy to not stick to that and make the back test look good. But the only person you're fooling in that situation is yourself. So, you want to, the best way to do it is have as least amount of inputs as possible so that there's less inputs that you can fit, right? So you can start with that. And then you have to actually trade. And what you need to do is keep a record of your trades, and keep it honest and go back and look if it's really working or if it's not working. I mean, your P&L will tell you if it's working or not working, but you don't know if your P&L is made up entirely of trades that are that idea. So what I did was I kept a notebook of all my trades and I put them into different categories of what types of trades they were. And then I went back and I looked at over time which trades were working over time. There were certain trades that worked sometimes, and we would tendency to remember those, but did they actually work over time? And if they didn't, then I threw those out and slowly just kept throwing away the ideas that I might have had one great trade on, but over a 10-year period didn't make me any money. I'd throw those out and I would be left with the ones that were working over time. And that was ended up being what turned into my process.
I would love to tell a story right now. Yesterday I have met one of the greatest hedge fund advisors for American and European hedge funds. He's an Israeli guy, super smart Israeli guy. And I asked him, hey, what do you think about my idea? And he told me, let's go back to the efficient market hypothesis. So basically, the efficient market hypothesis says, I'm just explaining to the people that a thing that used to work for the 10 previous year for the 10 last years, not necessarily means that it will continue to work on the year after. And a good explain a good a self a great self-explanatory explanation will be that will cover that hypothesis will be what happened between 2022 because stocks and bonds tends to diverge and once 2022 hits the both assets went down dramatically. Now, I would like to ask you, because of the efficient market hypothesis, and because we saw how grateful we are to know such an hypothesis that would save us from dangerous curves. How do you evaluate your ideas that your efficient market hypothesis won't hurt them over time because it will, or it might.
You just have to keep monitoring. You know what I mean? Know what your expected returns are. Know what your expected drawdown is. Know what your expected volatility is. And keep monitoring that to see. I do this every quarter, right? Or at the very least every half year. I go through and I have videos on YouTube where I do that. I go through, here's all my trades. Here is the percentage win loss. Is that within my expectations? Here's the return to drawdown. Is that within my expectations? Here is the correlation to other assets, which is part of what my process is about. I'm trying to create a return stream that is not only positive return, but also has zero to negative correlations. So is that working? And is that within my expectations? And as long as it is, I'm good. If it's not, then I have to make a decision on what's going on. Now, clearly, 6 months, just because it doesn't work for a quarter or 6 months, doesn't tell me that it's completely failed. I mean, anything could not work for that period of time, right? But if I were to go, say, even a full year where none of those things were doing what I expected them to do, were falling within my expectations, then I would have to start thinking about is this stuff being arbed out?
Mhm. Sounds sounds
I
like
feel
a great.
fortunate. I feel fortunate with my process that nobody really wants to believe that this is how the markets work. So therefore, it's probably not going to get arbed out. You know what I mean? So that's good.
What do you mean? What do you mean that nobody really wants to believe that that's the way the market works?
You know, people don't want to believe. People that come out of business school, MBA programs, they want to believe it's about getting deep into the balance sheets and the earnings, forecasts and doing a better job of forecasting earnings than the rest of the market is doing, and that's how you're going to make money. They want to believe it's about their level of intelligence being higher than the level of intelligence of the market. That's what people want to believe. So I have
Which
that going in
is
my favor. They
which
don't
is
want to
possible?
believe. I don't think it's possible, no. But they want to believe that. That's what they do. Um, they don't want to believe that it's about what I'm telling them it's about, which is that when people get way too short, um, there's a high probability that the market turns and turns very strongly the other way. And when people get way too long, there's a high probability. That's the discounting mechanism, the positioning, not the price. People don't want to believe that. So, and as long as they don't believe that, my thing should continue to work. And quite frankly, without sounding like too much of a jerk, I'm 57 years old. If it doesn't work anymore, well, then I had my day, I'll retire. Fair enough.
Understand. But I want to get back onto your answer, and I would like to ask you, Jason, what is the discounting mechanism?
I
Can you
believe
please
that the
explain about it
discounting
a little bit?
mechanism is participation. That's what I believe the discounting mechanism is. Are people too long
Participation
this
in what?
asset? Therefore, has it priced everything in? Are people too short this asset? Therefore, has it priced all the bad things in already? That's what I think it is. Trying to think that it's price, oh, all the bad news is discounted in whatever. All the good news is discounted into Nvidia stock already because the stock's it's gone up 300%. Um, that's how most people try to look at it. I don't look at it like that. I look at it like all the good news is discounted in because everybody is already super max long Nvidia. And it's not that I think they're super max long because the price has gone up. I need data, which is why I don't trade individual stocks because I can't really get that data for individual stocks, right? But this is what the COT data does for me in the futures market. It tells me I don't have to guess, you know what I mean? Um, that people are super long. I have data that tells me that they are, and I don't have to argue with it. I don't have to make assumptions based on price, which is what people make assumptions on. Um, so that's what I think the discounting mechanism is.
Sounds good. Now, I would like to ask you a pretty different question. Why have you started your YouTube channel?
So I was in Jack Schwager's latest book, Market Wizards book,
Yeah, yeah,
and
of course I know that one.
and after I
Super,
was in
super
that book,
fascinating.
yeah, after I was in that book, a lot of people were coming to me. sending me messages all over the place. I wasn't on Twitter back in those days, but on LinkedIn, I mean, I was getting like 50 messages a week, every week from people saying, "Hey, I read the chapters for this book. I really like your approach. It's really interesting to me. Is there any way, I could come work for you or do an internship with you? Or could you like teach me online how you do what you do? Could you mentor me? This and that." And they kind of caught me at a good time because I am approaching an age where I'm thinking I'm looking towards retirement. Um, but I clearly couldn't do that for hundreds of people at the same time. There's not enough time in the day, right? So that's what I was telling them. And one of the guys said to me, "Well, if that's the case, why don't I start a web page and we could centralize it and then a whole bunch of people can join and you could kind of take them through that." And so that's what he did. I'd never even met this guy, but I trusted him. He went and did it. And through that web page, we do a whole bunch of things where I'm trying to help people learn, at least how I see the markets really work and take them away from the scams that are kind of out there from different people. I never knew about this YouTube slash Twitter slash whatever you want to call industry of people telling you how to trade. But as I have learned about it, and I see some of these people, a lot of it is bullshit. And so, and I'm not saying my thing is perfect, but I can tell you it's not bullshit. All I'm telling people is this is how I look at the market. This is what's worked for me. It may or may not work for you, but this is how I approach it. And if you'd like to learn it, then come and join. And so with that, we started making, YouTube videos as a part of that. I'm trying to get out as much information as possible. Um, and that's all free, YouTube, and we have Discord, and that's kind of all free. And then if people want to take it to the next level, they can pay a little bit of money and they can join our service. And it takes money to,
What
I
do you
get a lot,
offer?
I get a lot of crap about that. Well, if you're so rich and you're such a successful trader, well, why do you charge people? Well, first of all, I'll say this: I
Uh,
don't. First of all, I don't make any money off of this thing. Okay, I'll tell you that straight up. $0 come my way. Whatever comes my way for that goes straight to a charity, which is on our webpage and can all be seen. But it does take money to run
yes.
something. Like I'm not going to get involved with something that's going to be a shoddy freaking thing. So it does take money. And people, I don't know how to do any of this stuff. I'm 57. There's a Discord on there. I never even knew what Discord was until this guy put this together, right? So someone has to do this, and a few people have to do it. And the only thing that's going to get them to do it and to do it right is to pay them. This is that's how the world works, right? No one's doing anything for free. So these guys do a very good job on our site, and they do so because we are charging people some money, and that money is going to them. So the better job they do, the more money they can theoretically earn. So I mean, that's what capitalism is, isn't it? So that's what we do at Crowded Market Report. There's a whole bunch of different things that we do. We have a newsletter that goes out. We have charts. We have conversations on Friday night. We have conversations on Sunday night. We have Discord. We have all kinds of stuff. And there's all kinds of different levels of how much you want to be involved.
Super. Super. So, one last question. If I would come to you and I would ask you, hey, Jason, please tell me how we can collaborate. I would like to learn from you. How I would like to learn from the way you trade, from the gap one that you're observing within your game trading, and so on and so forth. How do you approach me? What would you
Crowded
do in order
Market
to educate me properly?
Report.com. That's how you can do that. You want to collaborate with me, you want to learn how I do, you want to learn about the history of me and the hedge fund industry, and you want to learn how to maybe even break in. We've gotten a few people on our thing actually to get funded via some people that I introduced them to. All these different things. You join sort of crowd market review. That's exactly why we put this together. I didn't know where this whole thing was going to go. I didn't even know if it was going to go anywhere. But it's kind of gone a certain way, and it's grown and become a whole bunch of different things to a bunch of different people. But it's all right there.
Mhm. Super. So, Jason, I would like to thank you for your participation within our pod, the Trade Show. I really appreciate the opportunity to speak to you. I have learned a lot from that conversation, and I hope that our listeners and our viewers will enjoy a great listening material. Um, awesome. Thank you for the opportunity. Thank you for being here.
All right, man. Good talking to you.
Good talking.